What is going on, Future Focus family? My name is George. That's Matt. And every day we go live to make videos to help you make money investing. Matt, what's up, man? How you doing? What's going on with you today?
Chilling, man. Just
Chilling?
just usual.
Yeah. It's good. Good to have you on as always, brother. I know the people are happy to see you. As of right now, let's get right into it. Hold up. I pulled up the wrong one. All right, as of right now, the S&P 500 is up 0.17. The Dow is up 0.18. The NASDAQ is up 0.35. The Russell is down. That's the small cap index, 0.40%. You got crude oil down 0.67%. You got Matt's favorites, gold and silver, up 0.87 and 0.122 respectively. You got the 10-year bond. It's neutral. Exactly. Hasn't moved at all. It's sitting at 1.30. You have BTC, Bitcoin at $42,565. The entire crypto index is actually down. It's up 0.18% at 1,065. A lot of things going on. The main topic for today's video is going to be: are we buying this dip? I know what Matt's going to say. I
You
know
sure about that?
uh,
You sure? You know what am I gonna say?
you're going to say, hell no, you're not buying this.
That's not
Um,
true. That's
oh,
not
what?
true.
Whoa.
I didn't I didn't say that yesterday. Remember I said it was
Okay.
short term. If to my listeners out there,
Uh-oh.
I said yesterday was short term bullish, long term bearish, short term bullish.
Okay. So,
Mhm.
and to put it all into context, this is not, I look at things a little differently. I look at things, what I see now from, especially from the new investors, is they call everything a dip. They call things that are like one, like it could be down 0.5%, and they'll be like, "Oh, I'm buying this dip." It could be down 1%. They're like, "I'm buying this dip." What ends up happening there is you fall into things called a bull trap. I talk about this all the time, and a bull trap is simply when you get caught up in the excitement after a decrease, and you think you're gonna hit the like catch the bottom of a trend line or something, and then you jump in only to find out, whether it be a month later, week later, day later, hour later, minute later, that that was not in fact the bottom, and you just got caught up and now you're in the negative because you were just a little too impatient. Don't be in the market trying to catch call tops and bottoms. You know, just try to sell higher than you got in, or just hold, be a longer term investor and don't play the games. That's my advice. I have different strategies. Like I have the for example, when it goes down, let's say 0.5% to 1%, I call that a divot. For those who don't know, a divot is something in golf. It's like a patch of grass that's missing in golf. It's very, very minuscule. And I don't buy divots. They don't excite me. The reason I even know about divots is I got a scar on my head, and one of my bosses, he used to call me divot because I had a little missing, like when my hair would grow, you would see a little patch of hair missing there. That's the only reason I know what a divot is. But don't buy the divots. 0.5% to 2% is not, to me, is not buyable, is not exciting. Especially if it's a company that you are just want to hold for a short time frame. If you have a 1 year to 5 year time horizon, I wouldn't be looking at that. What is your take on it? Like, how do you look at what a drop is? What do you consider a dip?
Mm, that's a good question. What do I consider a dip? I well, actually, what you describe, actually, I actually consider a dip. So like 1% drops, maybe anywhere from is 1% to 5% drops, maybe at times even a 10% drop. But anything past that, that's like the golden rule. Anything past 10% is a correction. So but this is my thing. I personally I would almost venture and say none of this stuff matters because I feel like the market is fake, man. You know, and if you this is not hyperbole. I gotta clear it. I gotta show my references. If Jerome Powell is front running trades, know the market is fake. All right. It's not being based on supply and demand. We have one of the biggest guys on the street buying it all up. So really and truly, these little 1% dips, they could just very well be dips, especially for the short term. Short term. Midterm to long term, it may look a little differently. But these may in this atmosphere where nothing's real, there's no price discovery. Think about it, right? Think about it. In the pandemic, productivity, I don't care what nobody says. Productivity did not go up. All right. Output did not go up, but the stock market did. I'll let you come to your own conclusions on how that happened. But any little rivets, dips, technically it's a buying. I that doesn't mean you have to participate, but yeah, it technically, if you look at history, if you it would have paid well.
Okay. Um, but I still like what I started doing when I first started investing was dollar cost averaging, which I'm sure you've all heard of, which simply means you take your paycheck, you take a certain amount of your paycheck, and every time you get paid, let's say you take 10% of that and you put it into whatever ETF, or you put it into a stock or something like that. That's what I started doing in the beginning. And it wasn't bad. I mean, I was going up along with the market. Um, However, I didn't have money on the sideline at the time to jump in when the market did correct, really, when there was a 10%, 5%, which, you know, right now we're in the longest time frame since the history of the stock market without a 5% drop. And right now my portfolio, literally year to date, has been in a consolidation. Like, if you took away all the ups and downs, it would probably be in a straight line. My portfolio hasn't moved down substantially or up substantially. It's really stayed neutral. And I just haven't been really excited about anything. Even the price of buying call options on stocks that I felt could have a little implied volatility, the price is just too high. The risk reward just has not been there for me. Um,
So why do you think this is the longest time without a dip?
I think it's because there's a lot of liquidity and there's a lot of retail out there that every time they're getting paid, they're putting it straight into the stock market. They're doing
Retail
the dollar. I think it's only retail because of the amount that hedge funds, pension funds have on the sidelines. They're not really being net buyers of stocks. They're not really being net sellers either, but they haven't really been net buyers of stocks because they're trying to be a little more patient and they're waiting on the correction. But how impatient do you think they are? Like, knowing that, like, there's a whole buy the dip mentality right now where, like, investors see, oh, it's down, it's red 0.1%. I'm gonna jump in there and buy. Today's a buying day. I'm gonna buy AMC, I'm gonna buy GME. They're red today.
So you only talk about the two people, and this is my thing, right? So you got to remember, we in some arguments we say that retail is not enough to push the markets alone. We're talking
Mhm.
about record breaking territory of the longest stretch without a dip. That's retail only. I get institution. According to you, institution isn't buying. Retail only is responsible for the longest stock market bull run, if you will, without a major correction, if you will. Retail only.
Well, it's not retail only. I'd look at
Okay.
it in two camps. There's retail and then there's the hedge funds. But I know what you're getting at. You're thinking about the Federal Reserve. You're thinking about Jerome Powell. Is that what you're getting at?
Who else? Who else is buying bonds, liquefying the repo markets? I haven't proved this beyond a shadow of a doubt, but I'm pretty sure buying stocks through primary dealers. Who else is that strong to uphold the market? Can't just be retailers. Retailers always hold the bag. Right now they're getting the bag. I mean, if you
Not
look at historic
not
trends.
all of them. Not all of them are.
Yeah, of course, of
Um,
course, of course, of
because
course.
they all can't win. I think, and if you're a ape on Wall Street Bets and you're going to watch this, like, don't get upset with us. We're trying to teach you. Like, I want you to like close your eyes and think about let's say what you think is going to happen happens. Let's say they have to cover their bets. The hedge funds have to cover their bets. They have to, cover their losses. And they go and they become net buyers to cover, all the stock that they were trying to short. That's what these retail investors are all waiting for. That's the short squeeze that they all want. Let's say it does happen, right? At some point, whether the AMC stock hits $100 or $1,000, at some point, in order for retail to profit from that, what do you think is going to happen? They're going to have to sell to make money off of that. If they all at the same time become net sellers of those stocks, one, there has to be somebody to buy it. And then two, not everybody's going to get that $1,000 mark. And especially, we saw what Robinhood did. We saw what a lot of these, I think E-Trade was one that you liked, that you got upset about when they did it. They're going to put blocks on, like you're trying to sell. They're going to put blocks.
Yeah, that did upset me. That did upset me.
Yeah.
But because you can't say that, oh, there's no rules. Now there's rules out of nowhere. And no, right? That's the whole American way. Let people trade. Let people trade. Why are you saying no, you can sell, but you can't buy today? If that's not market manipulation, I don't know what is. But um like I said, nobody factored in the one thing that CEOs, if you will, CFOs, they have the power to create shares, right? They have a power to buy back shares, right? They have the power to issue shares. So I highly doubt a CEO, whether it may be a GameStop or AMC, they're just gonna watch their stock climb to 1,000 and not get in on it themselves, especially given their position. No, you just okay. Oh, really? It's going to 100. We're gonna issue more shares. We're gonna issue brand new issue. So
You see the screen?
let me see. Okay, all right. I mean that's the home team. That's the home team. I respect that. But
But
yeah,
yeah, man, I mean, I'm totally on board with you on that one. I want these retail investors, because that's the whole point of we started this, to like help people understand and help invest in the best ways possible, in the best things, and be open minded. And that's like, you got me. You talked about gold and silver, and I could have been like, yo, this guy's a snowflake. Like, I'm not gonna follow this dude, but I was open minded enough, humble
absolutely.
enough to go and invest in. And you literally saw me buy silver. I put my money where my mouth is. Like, you saw me go and invest in it. You know what I mean?
So,
And
so, so my philosophy is always believe I'm a liar. Believe I'm a liar and do your own research, you know, and just pretend I'm always lying. A, B, it might not be the truth today, it might not be the truth tomorrow. That doesn't mean, right? Michael Burry, right? People laughed at him. He called the recession 2, 3 that. He called something that never happened in modern history, right? I'm pretty sure people laughed at him, but right, the truth has its own time on when it reveals itself. So A, B, to the retail investors, please comment, obviously subscribe. But I love being challenged. I think that's how you get intellectual growth, is when somebody challenges your position and they force you to dig in and defend that position with facts. So please, whatever presentation that you want to come with, I love the tango. I love to tango. I don't like the one way.
he
I don't
sure
like
does. He
the
sure does. But yeah, just like he's saying, all he's basically saying is like that old saying, which is, you were given one mouth in 2 years, so you could listen twice as much as you speak. And just do that. Be humble, open your mind, pay attention, learn something. And that's what we're trying to provide you. With that, I'm a segue into our main theme of the day, which was some big news. Because if you watch this, a few weeks ago, we gave our 5 stocks that we felt would be the next FANG, and one of them was on mine, I think, and as well as his, if I recall, and that was Uber. Was that
Mhm.
one of yours too? I don't remember, but
That was
yeah. So
I could see it in there. If I didn't say it, I could definitely see it in there.
all right, so this is the news from today. While the market is neutral and down, Uber stock rises today as ride hailing giant hints at third quarter profitability. Shares of Uber Technologies were rising sharply Tuesday after the app based ride share and delivery company said it could turn a profit in the third quarter. In an 8K filing posted Tuesday, Uber said adjusted earnings before interest, taxes, and depreciation (EBITDA) could range from a loss of 25 million to a profit of 25 million, better than previous guidance of a loss of 100 million. The company cited improvements in both mobility and delivery. And as you all know, that includes things like Uber Eats and Uber, the ride hailing business as well. So let's take a closer look at Uber. This is the investors page for Uber, and they're nearly in 10,000 cities across approximately 71 countries where Uber is available. They have 142 billion paid to drivers and delivery people. Let's and let's keep going. Hold on, let me full screen this. We ignite opportunity by setting the world in motion. They have their ESG. So ESG is big. Like anytime any company you're investing now in, you want to make sure that their environmental, social, and governance is something that they're including in there, because companies that are doing that are gonna be the ones that benefit later on. They're like getting a head start on that. ESG is a big thing. At Uber, we believe that sustainability is integral to the success of our business. Our inaugural environment, Society and Governance reports outlines that many ways in which Uber builds value and through its core business, special impact activities help the world be a better place. But they need to make money, and the fact that they're gonna turn profit is huge, especially coming out of a pandemic. They have 88 billion in annualized run rate gross bookings across all platforms. Um, 16 million trips a day, and last week was the best week ever for them. That's something that the CEO said today on CNBC. I was listening to him speak. 101 million monthly active platform consumers. What do you think of this company, Matt? Like, what are your thoughts on Uber?
I mean, they're scary. They're scary. They could do great things. I could honestly I don't want to be so bullish, but they could potentially be the next Amazon. They could take over supply chains. Um, right? They could be that transportation mode in between supply chains, or integrated within the supply chain rather. Um, I already heard that they're moving to airplanes, if you will. They could be very, very, very scary. I'm assuming at some point they'll probably, if they haven't already, purchase some type of bike share program like what we kind of used to use in Australia, the scooters. They're very scary.
Yeah,
They're very
so
scary.
they're trying to be like the last mile delivery. They're trying to
Mhm.
dominate that area. So as they have a lot of competition, but they're dominant. Like in every single state, they're the dominant authority. And Lyft doesn't have the global reach. Lyft did something where they try to like stay local here, and they focused on the United States. They
Yeah,
figured that they would get dominance here. What are you saying?
yeah. No, I said I get that. I see why the CEO want to do that. I
Yeah,
see why
so their
they don't
products
support.
include the ride hailing, the drive, Uber Eats, Uber for Business, Uber Freight, which is where they Uber trucks, like trucks deliver things for them, and Uber Health. So let's just look at Uber Health to see what that is. So, removing transportation barriers to vaccine appointments. Uber Health can help you organize request rides and vaccine appointments for people without access to smartphone or Uber app. We can help you distribute vouchers. I didn't even know they had this Uber Health. Did you know about this?
No, I did not, but that's
No.
very, man, what a great field to be in.
Yeah, so healthcare is one of the sectors
Mm,
that I'm like most bullish on coming
mm,
in the next few years. Like even the rest of this year, I think that sector is very undervalued right now. I'm not sure if you share the same sentiment. Some of my favorite sectors right now are commodities, financials, the healthcare sector. That's like my top three areas right now that I can see the most growth. My second tier, where I see like this is 10 to 15 years out, where I see a lot of growth coming in the future, is the space industry. I see,
mm.
I'm invested in the space industry. I have a whole space portfolio. That one's one that I price cost average into, not dollar cost average, price cost average. That's one of them. And the second one that I'm really bullish on that I haven't invested in, I'm still doing research on, is the VR, the what is it, augmented reality or
So
AR?
you got AR and VR, virtual reality and augmented
Yeah, so
reality.
so the AR is where I think the next levels of innovation are going to come from. So I'm going to start building a portfolio. Once I do my research, I'm going to start building a portfolio of AR companies. There's cryptocurrency blockchains that are also in like trying to be part of that AR space. So those would be included in that. It's not going to be a huge chunk of my portfolio, but I think uh, next time there's a crash or a long bear market where valuations start making sense again, I think that's one of the spaces where I'm going to dump a lot of money into. I'm not sure
Yeah.
what are the sectors that you're the most bullish on, Matt? Like, what are the sectors you
Um,
like?
well, for right now, commodities. So once commodities takes off, I'll probably go back to offensive position, a little bit more offensive, but I think commodities are due up. And I've always had that mentality, but the market has been kind of moving fast. So I wanted to focus on gold and silver, but I always knew that copper was the next thing. And before I got into it, but before I could really get a good position, it took off. And then I knew that the next one was going to be uranium. And I got a decent position, but before I got like a back up the truck on uranium, you already see it's kind of taking off. But
Yeah.
I like commodities for two reasons. You have the what is it? The Belt Road Initiative,
Hmm.
or the Silk Road, the modern day Silk Road. That's going to take tons of commodities. You're building a highway from Europe to China. That takes so much raw materials you won't believe. That
I think that's why China's been stacking gold. So definitely a part of that, I think.
that and also the infrastructure, right? The United States, we're overdue. You see the infrastructure, we having bridges collapse, our streets are not good, the water lines are leaking all sorts of chemicals, and people don't know this, right? They're making a big fuss of it, but Dwight Eisenhower funded the last major infrastructure bill. If I'm not mistaken, that's how, I don't want to give false information, but the highways came about, right? So Route 66 and all that, all the American, um the prominent American history that came from that previous infrastructure bill. But think about the commodities, right? And that's how it always goes. Um, it goes from consumer goods to the stock market and all this other stuff, real estate, and then commodities. It's like, whatever. I have money. I could buy from this country. That now things are getting tight. Things are getting hard to buy. People are starting to hoard not just the items, right? Retailers hoard items, countries hoard commodities. That's how I look at it.
So I just got some a news notification on my phone. House Democrats are going to plan on Tuesday to vote to avoid the government shutdown, lift debt limit, and showdown with Republicans. And that's something we talked about last week, where Janet Yellen's been yelling at the top of her lungs, trying to let people know like this could be catastrophic. So hopefully people listen. Uh, but maybe we need that. Maybe as an economy, we need to face true adversity, not bail ourselves out, and see what our economy is truly made of. What if our economy literally shut down? What would that mean? What would the implications of that mean? Uh, we might need that wake up call, but being where we're in, we can't get into too much of that political stuff. But this is not a political channel; it's a finance channel. Um, let's talk about something that covers both. The next topic of discussion is going to be this news, which is kind of in the crypto space. So the Biden administration targets ransomware payment enablers. So this is SUEX. I think it's called SUEX or SUEX. I don't know how you want to pronounce it. The Biden administration took aim Tuesday at the financial marketplace for criminal ransomware gangs, announcing sanctions against a Russia-based virtual currency brokerage that officials say has processed illicit transactions for attackers. And if you guys don't know what we're talking about, there's been a few different places where, not even a few, there's been massive amount of places where ransomware has been put on against companies like Apple, Microsoft. We already know what happened with the gas company. This has been going on in behind the scenes with some of them because some companies are just embarrassed and they don't want to let it be known out loud. But it happened at Verizon. It happened at T-Mobile. So this has been happening all over the place. And the way that these ransomware attackers are getting that money from the companies is through cryptocurrencies. The Treasury Department sanctions are aimed at disrupting the economic infrastructure of a ransomware threat that has surged over the last year and targeted vital corporations and critical infrastructure, including, like we talked about, the fuel pipeline. Ransomware payments reached more than 400 million in 2020, and that's what is broadcasted. I'm sure there's way more. Today's actions is a signal of our intention to expose and disrupt the illicit infrastructure using these attacks. The administration selected for sanctions a currency exchange known as SUEX OTC, a broker it said has facilitated transactions for at least 8 ransomware variants. Though the majority of virtual currency exchanges are engaged in legal commerce, a subset of so-called nested exchanges sounds to me kind of like the dark pools in the stock market. I don't know if that's what it sounds like, the cryptocurrency version. More than 40% of his known transactions history is associated with what the administration describes as illicit actors. So, what is your take on this, Matt? What is your take on this news?
I want to see what I want to see if this develops. It's funny. This is kind of old news because 3 weeks ago, I think all the big tech CEOs, they met up at the White House and they spoke to Joe Biden, and they asked. I can't remember exactly what they were there. I can't remember. It slipped my mind, but they were there for something completely different. And then they brought up cryptos, and they said, "Hey, like." They were this blew my mind. They were begging Joe Biden to regulate the crypto industry because according to them, this is the tech giants. This is not the government. According to them, a lot of hackers are incentivized to carry out certain acts due to the easy exchange of crypto and the back and forth and the fluidity of it and the anonymity of it for some coins. So I just found it weird that these tech guys who you think would be on board with crypto, they were like, no, please. This is according to a White House correspondent. So I don't know if it's true or not, but that was the sentiment. Like, you need to get a rein because ransomware is at an all-time high.
Yeah, it is. it's getting crazy. So we got to find some way to mitigate it. So at least the administration is taking some steps to try to mitigate it. Um, I think you have to cut it off at the knees in order not to let it happen in the future. Like, just don't pay them. Um, it, well, you tell me. Let's say a company. Which company would you say has a lot of your information?
All of them, right? And I'm not being facetious. Literally, all of them. Google, Visa,
So let's
all of
say Visa. Let's say they hacked Visa. Would you rather Visa pay them, or would you rather just them release the information that they have on you? And they don't
so
just release it to the public; like they sell that information. Like they're gonna make their money anyway.
so that's a little bit of an easier example, right? So of course you say no, don't pay them, but what's not online now, right? So a good example of this is the gas pipeline. I think that's probably why they were at Congress that day. I'm not sure, but the gas pipeline is a good example. When they hacked that, and they could potentially blow up a gas line and just not only potentially physically harm those in the area, but again, another disruption to the supply chain. Some people say, you know what? And a lot of times, a lot of these government agencies, I'm talking about city level now,
Yeah.
they also get hacked. They just go ahead and pay it. They don't want to have to deal with the headache. Now, I know where you're going with this. We don't negotiate with terrorists, right? I get that, but mm-mm, I think we're two steps behind the robbers. We're two steps behind the robbers on this one.
Yeah,
So,
we might need to do what they do in the movies and hire some of these guys to come work for us.
but I think what's a better solution than, oh, do I pay or do I don't pay, or do I stand tall in my decision? You have to have an old school way of doing things, and people don't want to hear that, right? But you know what makes the Marine Corps the Marine Corps? We hike everywhere, right? Yes, we take planes, and yes, we do this, and yes, we do that, and battles are fought in the sky, but we still hike, we still go out to the field, it, we still prepare as if technology won't be around, and you have to do the same thing. You cannot. I'm not saying that you have to stay in the antiquated way of doing things, but it should almost just be a drill. You depend on technology, but once a month, once a year, you got to have your own blackout system. And how do you conduct business from
Yeah,
that point?
I think they just need to train just like we do. Like, all right, have notional
There you
attacks,
go. There you go. There you
or hire like Palantir or something to do the data analysis for them. How much can you lose? Where should you keep your data?
there you
Uh,
go.
and
There you go.
if you think this is what we're going to be doing in the future, then maybe you could look at some companies in these spaces. There's some companies out there that they provide data security, so they do this. Palo Alto is one of them. You got CrowdStrike, that's one of them. You have other companies out there that are doing this already.
I just want to throw out there too, because I know everybody thinks everything is online, and to a degree it is. But really top secret plans, let's say for example, blueprints for aircraft or certain equipment, a lot of times they have hard copies for this very reason. I hear, right, sources, that's how you got to preface it. Sources say in the Pentagon there's certain dead rooms where there's no internet access. For this very, you cannot hack a room that does not have internet, that does not have any internet. So I'm not saying I'm making a case for gold and silver here, cough.
You always are.
But you got to have a digital runs, yes, digital is great, but you also have to have an analog, right? So planes are great, you still need ships, you still need railroads, to some degrees you still need horses, you still need, So things just don't go away. There's just another lane created, but that doesn't necessarily antiquate previous modes.
All right. So, with all that said, we're going to segue right into Matt's favorite segment, Smash or
Yeah, yeah.
Pass. Yeah. All right. So, today's segment is brought to you in part by you, the viewer. Um, so, since we talked about this stock today, let's just get right into it. Matt, what do you think of Uber being that in the last six? This is the 6 month chart of Uber. Let's change the line. I don't like the line. I like the candles better. So this is the chart, 6 months. Let's look at the 2 year chart. This is the 2 year chart for Uber. So the low during this time frame was about $21. I don't think that's correct because I'm pretty sure I bought this around 16. Uh, Let me see. That's year to date. 1 year ago. 5 years. Well, I guess not. The low during this time was about 20, around the $20 range. Currently, it's sitting at get this out of here. $43.72, which is up 9.81% from yesterday. But during the last 6 months, this chart has been a $60 stock. So, what are your thoughts?
Um, Granted that I didn't look at the annual report or the previous balance sheet, this is definitely a smash. Definitely,
Okay. And
definitely.
you can look at the information right here. This is one of the reasons I like this, but you got support at $30.41 during this time frame, and you got resistance at $50.75. So if we could break that level of resistance, which I think we can because we broke it before, I think this is a good stock to invest in as well. I like to put hard numbers. So for me, it was under 40, it was investable. But now knowing this latest development that they will be profitable, uh, when they said they were going to be 100 million, not uh loss, but now they're going to be 25 million profit after a pandemic. That to me is huge. Before the pandemic, it was, I believe, December. I was watching the market and they initially said they would be profitable by quarter 4 of 2020. So this was pre-pandemic. Obviously that didn't happen, but throughout the all pandemic, they did something that in the industry is called pivoting. They pivoted and they invested heavily in Uber Eats. They invested heavily in all the other segments that they could, and that paid a lot of dividends for them. To me, this one is a hard smash. Even though it's up 10%, I think people are watching this because as we're talking, this is going up, Matt. You can see it up here. It's up 10.07, 10.08. So to me, this is a smash, even though it's up on the day. I don't like to buy when it's green, but I think if this is a long-term hold for you, I think you'd be safe here. However, just keep in mind that if there was all of a sudden some black swan event and the stock market went down together as it has been, you could get this probably under $30. So buy this knowing that it could be under $30 in the event. And then all that means to me is on sale. You could load up some more. Uh, you agree, Matt?
At 100%.
All right, so let's look at a penny stock today. This is VISL, Visalink Technologies. This is one that one of a close friend of mine, he loves this one right here. This one is in the technology sector. Looking at the 1 year chart, this stock has been as low as the $1.12 mark and as high as about the $5 mark. Um, just fundamentals. They have had some news here and there, but what just looking at the technicals, um, this does look like it's in a pocket where it may have a next move up. Right here, what you see down here, let's see if we can zoom in on the right hand side. So what you guys see right here on the chart, right here on August 19th. And if you scroll right to September 20th, this is what you call a double bottom. And this is a bearish sign. This is something you don't want to see. If we break through this level of support, this could be a very bullish, as you were, a very bearish sign. Um, do you think this is a investable, Matt?
Yeah, I was just doing some research in it. No, it's not for me. I saw a little bit. I don't know enough. I'm not that moved by it. I see the action in the price, but again, I'm not moved by price. I'm moved by value. So
So
I'm a
Visalent Technologies Inc., for those who don't know, is an American technology company that specializes in the collection, delivery, management, and distribution of high-quality live video and data. Founded as a technology in Sarasota, Florida in 2002, the company has acquired both Visalink and Integrated Microwave Technologies by 2017. Um, this technology is used in um, different stadiums during large events. I'm I may be wrong, but I believe they were used during the Super Bowl as well. Uh, so that's a good look for them. But if you're looking for stocks with a good return, Visalink Inc. can be a profitable investment option. With a 5-year investment, the revenue is expected to be around 409.45% positive. So the prediction is there for the stock that it has the room to grow. I know a friend of mine, he really believes in this. The revenue is 28.9 million. Um, so this is another option, another something to have on your watch list. What you said, this is not a buy for you.
No, I'll pass on this one.
So Matt is not smashing, he's passing. I'm gonna pass as well. Is I think being that this stock has been at the $1.21 level, I think that it could go south. It has dropped a lot. The momentum is trending downward for this stock. So I think we'll pass on this one. We're both gonna pass on it. So let me shift back. What are your final thoughts for today, Matt?
Damn, we ain't even talk about Evergrande. I see the market's up, so what all's forgotten? It's just we we moving behind. I saw Kramer say all trouble stop at the American borders. So he must not be talking about immigration. He must clearly be talking about Evergrande spillage. But
Well, even though we're up on a day, we're still down off the highs of the day. So,
right.
like I started the segment talking about bull trap. Don't get caught in bull traps, ladies and gentlemen. Um, if you don't know what a bull trap is, go back to the beginning of this segment where we talked about it. But that's all I got for today. Matt, see you tomorrow. As always, invest in us and press that like button. Invest in yourself. Smash that subscribe button. Until next
Easy.
time.
Easy.